Stop writing, please. Stop. We continue with depreciation of assets. There's depreciation of assets because the asset is wearing and tearing. The asset is losing its value. So the loss of value of an asset is depreciation. So you purchase, maybe this is my laptop. As year passes by over this laptop, the value starts dropping. That is depreciation. I think you understand depreciation here. In the previous class, depreciation is the loss in value of an asset. The loss in value of an asset. That is depreciation. And to calculate depreciation, we have straight line method. We did that in the previous class, or reducing balancing method. But today we want to calculate the scrap value. What is the scrap value of an asset? The scrap value of an asset is the worth of that asset at the end of its economic life. Oh, my laptop is going to, the economic life of my laptop is going to be 7 years. So what is this laptop going to worth after 7 years? That is scrap value, the worth of that asset after 7 years. Do you understand what scrap value is here?
Yes.
The worth of an asset after its economic useful life. So here I wrote, scrap value is the estimated worth of an asset at the end of its useful life or economic life. The useful life is the life, is simply talking about that period of time which the asset will stop being useful for the company. That period of time which the asset becomes less useful or no more useful to the company. That is economic life. Do we understand economic life here? So the scrap value of an asset is determined by the demand for and the supply of the material. So what are they trying to say here? The value of an asset will be based on how much more people need the asset or how less do people need the asset. So if the asset is always going to be available, like it's not scarce, the value of the asset will fall. But if it's an asset, I'm talking here, I'm sorry for you, I'm talking here, you're doing this. Don't worry, you understand very soon, the exam is coming. If the asset is something that is always is excess in the market, the value will what? No, sorry, if it's excess, the value will drop. If it is scarce in the market, the value will rise. So that's why we said it depends on what? The demand for and the supply of. So if the demand is more, if the demand for the product is more, that means a lot of people need the product, the price rises. But if the supply is more, the price drops. Do we understand how we get the scrap value here? It is based on how much more do people need the product or how less do people need the product. If the demand for the product is increasing, the price, the scrap value would rise. If the demand for the product is falling, the scrap value would fall. If the supply is increasing, the scrap value would fall. If the supply is less, that means scarce, the scrap value would increase. Do we understand scrap value here? Do we understand all or not? Do we understand or not?
Yeah.
Okay, sit down properly, please. So now we have a question. It said, More Enterprise Limited purchased a new machine for 50,000 euros. It is estimated that the machine will have a useful economic life of 10 years and have a residual value, which is the same as the scrap value. We call it scrap or residual value. Residual value. It has a residual value of 5,000 euros required. Calculate the annual depreciation charge against profit over the lifetime. So we need to find the depreciation charge on this. But to get the depreciation charge, the first thing we need to do is to check if the sales of this asset will give us a loss or profit. So we need to find the loss or profit or value in terms of selling this asset. Yeah, because the cost of the asset is 50,000, right? The cost of asset is 50,000 euros.
Is the profit equal
What?
capital minus
This is what?
capital minus income equal profit?
Profit is capital minus what? Income. Capital minus income. What makes you to say capital minus income? What is capital? What is income? Capital is the amount of money put into the business. Income is also money received from the business. No. Profit is your revenue minus your cost. All right. So, as I'm saying earlier, so the cost of the asset is 50,000 euros. The scrap value is 5,000. The residual value is 5,000 euros. So we need to find if it is a loss of value or profit of value. But based on this, the value has lost in value.
Mister, what is residual value?
Residual value, that's the worth of the worth of the asset.
After its economic life?
Yeah, yes. So after its economic life, it will worth what? 5,000.
So divide by 10.
No, you don't divide by 10. You minus this from this. So the loss of assets here, the loss of assets equals to the cost minus the scrap value. So the loss of assets is 45,000.
45,000.
Do you understand that, please?
Yes. So residual value is just how much less it's supposed
The
to be.
worth of the assets after the economic life of 10 years.
So if it was worth 50,000, after its economic life, it's worth only 5,000.
No.
What if it was?
After its economic life, if it was 50,000.
Look at, read it again. The asset is 50,000. At the end of 10 years, it's going to be sold for 5,000. So how much has the asset lost in terms of value?
45,000.
45,000. So that is the loss of asset. But that is not where we're going. We want to know the amount of depreciation charged for each year. And it's how many years? 10 years, yes or no? 10 years, yes or no?
Yes.
So the depreciation charge equals to the value, which is 45,000, divided by the numbers of years, which is 10. So it is 4,500 per year, yearly. Do we get it?
No.
I'll explain again. We have the historic cost of an asset, which is 50,000. The historic cost of an asset is 50,000. At the end of its economic life, it's going to be sold for 5,000. That's the value. Economic life, that's what we're doing here. What will be the worth of the asset after 10 years? We said the scrap value is the estimated worth of an asset at the end of its economic life. So that means the residual value is what? 5,000. So the question says we should calculate the annual depreciation charged against profit over the lifetime. So we need to know if the sale of assets will give us a profit or loss. But based on what we have here, for 50,000 minus 5,000 is going to give us 45,000. That is the loss of an asset. Do you understand?
Yes.
So the loss is 45,000. So how much is charged yearly? Because it's after for 10 years. So to know the annual depreciation charge, it will be 45,000 divided by 10 for annual depreciation charge. The loss of assets is 45,000. So how much are we charging each year? On 45,000 for 10 years. It will be 45,000 divided by 10. So each year that passes by, the depreciation of the asset is 4,500 euros. Do we get it? No.
Yeah.
Please write.